Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your, hell, I don't even know. It's been, last show we did was the 20th of December, which means it's been 8 days since I've done a show. So welcome, everybody. Yes, the mustache is probably getting thicker and thicker. For those that sent holiday cards, I see Sly Dog in here. Thank you so much for the holiday card, Sly Dog. It's on my mantle with all my other holiday cards. So thank you very much for those that sent me gifts, and I do appreciate that. Hope you did something fun for your holidays, and we're with family and friends, and now getting ready for probably the drunkest holiday of the year, which is going to be New Year's Eve, so be careful out there. We have one more show. Today is the 206th show that I've done this year. Crazy I'm doing that many, but 206 shows so far, and then tomorrow will be the last one for the year, which will be the 207th show of the year. So I'm sure a lot of people are going to be joining us late, as I know it's a lightly traded or attended session near the end of the year. But today, we're going to do something a little bit different. Now, tomorrow, hopefully I have enough time to go through all of my trades. I haven't had enough time to analyze everything, but give you a rundown of what happened in my trading year, in my accounts, what worked, what didn't, and that type of thing. And I thought, you know what? You always hear me do that on the final show of the year. I thought it might be interesting to do it from someone else who has been on this program many times. And our guest today is Jerry Baldwin. He's going to talk about reviewing your trading year. Now, it doesn't mean we're going to go through every single trade that Jerry made, but as a professional in this industry, you should go through and you should look at what you're doing. More importantly, what you're doing wrong. If you don't know what you're doing wrong, you're not digging hard enough, because there's always something that you're doing wrong and something you can do to fix it. So without further ado and talking too much into this, here's Jerry. Welcome, Jerry. Good to have you back in the program, my friend. How you been?
Merlin, I'm doing awesome. It's so nice to be back. I miss you and everyone out in Southern California. It's always such a pleasure to be with you. It feels like it's been a while, but we are together today in the holiday season, celebrating together and with all of your people, and it's really great to be here, and things are fantastic.
It has been a while. It's been a few months since we've had you on, so I'm glad you got it right at the tail end as the doors closing on 2023. You just slid right under like Indiana Jones. I love it.
Perfectly, absolutely, yeah. We're gonna get a great one in today, and then we'll do another one in January as we kick off the new year, and a lot of enthusiasm coming into the markets and coming into the world as the year flips.
Yeah,
so, lots of great things ahead.
Lots of optimism for the upcoming year. Let's start off with you and kind of your style. So it's the end of the year. What sort of things do you do? Because obviously you're trading pretty much every single day, and you are maybe trading futures, some other asset classes, whatever tickles your fancy. What sort of checks, balances, procedures do you put in place for yourself at the end of the year to look at and say, what am I doing that's working or what's not? What do you do?
Yeah, I think it's important to do, first of all, just to take a look and see, we talk about trade plan and how important having a trade plan is, but then also going back and revising, that continuous work in progress, which is the trade plan. And so I do that regularly, but with an extra emphasis near the end of the year, because, you want to kind of see, where were some of the big trades that you had that went the right way, where were some periods where things didn't go your way, and what was going on in the markets at that time, or were you not following the plan as strictly as possible? So I absolutely do it. Things I look for specifically are, again, kind of seeing where some of the big moves were, some of the better trades, what contributed to those. I like to go back to and kind of analyze, did I let things go as far as I should have let them go? Like, as you know, I'm always evolving with some of the things that I'm using and continually tweaking the plan. And one of the things I try to do is make sure that I'm maximizing some of those bigger moves, as best I can with some type. I like the parabolic SAR as an indicator that helps keep me in moves longer than I would have normally stayed. In some cases, it can be very rewarding. In other cases, it's just good. But I like to use something like that to kind of help me maximize these moves, because we like the 1-to-1, 2-to-1, 3-to-1. I like to lock profits in at specific price points so that I'm paying for the trade. But one of the things in doing this review that you were talking about, I found was that I wasn't letting, for example, a final contract go, assuming that you're trading more than one contract, whether that be a mini or a micro, on a future. I wasn't letting enough of those go to where I could have let them go. And so that was one of the biggest things that I took away from this year's review, going back and looking at the trades over the last year.
And is that a result of just kind of, as that trade ends and just following it for the next couple of days going, oh God, if I just kept that one in, I would have made X amount more? Is it just kind of the summation of many of those over this year? And you said, you know what, it seems like this is a repeating theme for me. Let me focus on that.
Exactly, Merlin. Yeah. And it wasn't even so much days because I know you do a little bit longer term things, but for me, I'm trading, generally a 5 minute window, a 5 minute candle. So I'm able to see immediately, here I am closing a position out at a 2 to 1 or 3 to 1, which I'm grateful and I'm super happy about. But then all of a sudden you see that thing go another, 6 to 1, 7 to 1, 8 to 1, and just following that SAR indicator that I've really come to like. Had I just followed that, all of a sudden now I'm locking in, in some cases sizable, that really adds up as you start to add that in. So that was exactly as you're saying. But like I said, in my case with active trading and trading on a minute window, I was able to see the difference in the outcome, almost immediately, within another half hour as it continues to go either up or down.
Mm-hmm.
You're thinking to yourself, wow, I left quite a bit there.
Do you grade yourself or critique yourself on things like winning percentage? And this is an ongoing discussion amongst a lot of traders. Some will say, it's all about having a high win percentage, and rightfully so. Some would come at that and go, well, you could have a 99% win rate, but if your losses are all if your wins are really small and you have one gigantic loss, you're still a net loser. So it's not just about win rate. Do you have a target for yourself, win rate, or do you ever critique yourself that way?
Yeah, you know what, Merlin? I don't. It's a great question, and you're right. People, they'll ask, if you have a win rate or do you know what your win rate is? And to be honest, I don't track it that closely. And the reason I don't is because, again, the way I like to trade is I like to lock things in sooner than later on the overall trade. For
Mm-hmm.
example, um, I might take a 1 to 1 trade and lock a portion of the trade in at that point. So now if the trade goes against you, it's still a winning trade, but
Right.
you won very little. Whereas, if it does go out to 2 to 1, 3 to 1, or ultimately until the SAR reverses itself, those can become big winners. So, if you're looking at a win rate, I'm only looking at 1 to 1 for a win rate. So it's positive. So no, I don't look at it per se as, what is my winning percentage? Because I think trade management is something that I've come to learn in the last, few to several years. But the trade management is something I think is fascinating, and it can be in and of a class in and of itself, just in terms of how are you managing that trade. For example, taking a 1 to 1 trade and all of a sudden it's a winner. Well,
Mm-hmm.
how did you do that? Well, here's how I'm doing it. It's a matter of the management of the trade, not so much just trying to be right 70 or 80% of the time.
Right. And it's one of the things that always bugs me is when people quote their win rate. Like, I generally don't like to do that. I will on this show, not today, but tomorrow, if I get through all my trades, because I analyze them line by line to see what my exact win rate is. And it's not just, for me, it's not about a high win percentage. I think that you could have a 50-50 win rate and still be a great trader as long as your trade management, as you pointed out, is in check. And to me, that's like the most important part is, when you are in a winning trade, how do I let that one run? And I like that you said that that's kind of your end of year review. Is there one in particular that just sticks in your mind as like, oh God, this one? Because, for example, I'll give you an example. The Russell. Let me bring up the IWM here for the folks. We were back in September. I was talking about how the Russell 2000 was coming into the lower end of a range. It's been in for the better part of a year and a half. That was actually right on, I think, the October 27th, 28th show. Anyway, right as we came down there, and I was talking about going long, and unfortunately, I went long on the NASDAQ 100, and it was actually the day itself was Friday, October 27th. You guys can go back and look at the show, everything I'm talking out my butt, because sometimes people do that. But that low on October 30th, 27th, the Friday, it was right into the lower end of that range that the Russell's in for the longest time. And I said, great time to go long. I actually went long the NASDAQ 100. I held it for 2 days because on Wednesday, November 3rd, I believe, was the FOMC announcement. And I'm like, I don't want to carry it into that. And I'm looking at this chart after the fact, like, the bounce from the lows where I got in on Friday to where we closed out on Tuesday was like, 1.4% gain. And, leveraged properly with options, great. It's awesome. But from that the whole move was actually up another 26.68%. So I'm looking at this one as son of a biscuit. This is that one that just really, really got away from me, and I wish I would have held it. But so what? I did what I planned to do. That's one I look back on and say, damn, I wish I would have done that differently. Do you have one that you can share?
I have more than one, Merlin. So yeah, it took a number of those to where I started to really realize, okay, I gotta tweak some things here. So I don't necessarily have one, but I can definitely show an example. Can I share my screen with you?
Yeah, let me enable that over here, and it's all yours to share now.
All right, cool, Merlin. Thank you. So,
Yeah.
I will share this. I'll pull up a chart. This is not that. This is fairly recently. So this is just an example of what I'm talking about. But one of the strategies I love doing, and I started talking about this years ago. Back when we were instructing together. But the opening range. I love opening range
Yeah.
breakouts. And so I got an arrow on it right here. But this is the candle that broke out of the opening range to the downside. And an example of what I'm talking about is, so I have my fibs all set up here. Here's the 1-to-1, the 200%, represents 1-to-1 of my risk. The 300 is 2-to-1, the 400 is 3-to-1. So you can see the wick and the precision with which the 3-to-1 was hit, which is great. But then all of a sudden, I have this, you see these pink dots coming down. This is the SAR indicator, and this is what kind of can keep you in trades even a little bit longer. And this isn't the best example, but you can see how much further down here price went before the market's actually reversed.
Right.
So there was a little more than 3-to-1. And again, for me, what I like to do is I would get rid of the bulk of it at 3-to-1 and then just let that last one go, as far as this indicator will take me. And if it ends up at 3-to-1, that's fine. If it ends up further, well, then that's even better. So, but this is an example of what I'm talking about. Like I said, there were a number of these that were happening to me. And that's when I realized, hey, you know what, we got to start trusting this thing a little bit more, because it's allowing you to get much bigger moves than what you're allowing yourself to do. And that became really evident when I think I mentioned in the last show, I did a trading combine with a proprietary trading firm. And the reward for achieving the passing that combine was they literally give you a funded account, and then you trade that account. And it's really a cool deal when you see it all the way through. And so I had a profit target that I had to hit. And, I was noticing, yeah, you hit a few hundred here, that's great, but I'm not getting to the profit target as fast as I would like to.
Right.
So this strategy with the SAR, this helped me get there, because now all of a sudden, the 340, now all of a sudden, I do remember a Friday morning as clear as day where I'm trading in my combine, and it was like a $1,100-$1,200 morning just in the first hour, because we had one of those crazy opening breakouts to the upside. Now, not every day is like that. I don't want people to misunderstand, but this was one day where the market just took off to the upside, and I was able to let it just go. And that was a big move in achieving my profit goal for that specific combine. Mm-hmm. So yeah, these are all little things, Merlin, that we can do at the end of the year to kind of help get us to new levels going into the new year.
I'm just got so many questions going ahead. And again, for all of you that are watching right now, if you have questions for Jerry, send them on in the chat. We're going to kind of just free form it here as we go and talk about trading plans and objectives. When you go through your trade plan, you obviously have been doing things your way, your specific way, for quite some time. And you're pretty set in your ways. And I think one of the questions that comes up quite regularly is, well, listen, Merlin or Jerry, if you've been doing this for so long, why do you need to go back and revise your trade plan? So maybe talk a little bit about that. As why is it that you as a professional at this need to every year go through and just evaluate what's going on? Why is there that need for you?
Well, it's a great question, but I think whoever were to ask that question, I would be thinking I'm thinking of myself, most recently thinking of you, Merlin, in Southern California, Shohei Ohtani. Do you think Shohei Ohtani goes back and watches film of himself after batting, or goes back and looks to see if there's things he could do better? Or LeBron James out in LA, are there things that he's doing at whatever age he is that he can do better than what he's already the greatest in the world, or one up?
Hey, we don't like him here, so you can have him back. Take him back to Chicago. I don't need him.
Well, then we'll stick with Shohei, because I think we're going to put Shohei out there. So, but it's the same thing with you and I. Yeah, we know what we're doing. We can do it at a high level, but can we be better? Absolutely, we can. Mm-hmm. And that's what I find myself. And I think I'm a big sports guy, as you know. So I think you take any sports analogy you want, whether it be Tom Brady or whether it be Shohei Ohtani, Wayne Gretzky, whoever you want to take. Tiger Woods was always a big example. Here's a guy that's at one time was the greatest in the world, mm-hmm. and he would be on the putting green, at crazy hours of the morning working on his skills. So I think, Merlin, no matter how good you or I get at this, or how proficient we become, there are always, like you said, there are always things that we can do to make ourselves better. And as long as we're doing this, and as long as we're competitive, we're going to do that.
Mm-hmm. It's funny. Ricardo here says Leo Messi. Yeah, absolutely. I mean, not only does Tiger Woods that you mentioned, or Shohei Ohtani, or Leo Messi, Cristiano Ronaldo. I mean, not only that, they're practicing most likely harder than anybody else, and you get to reward out of it, but also these guys have coaches. And I find this so ironic. How the hell does Steph Curry have a shooting coach? Right? Like, he's the greatest shooter in the history of mankind. I don't know if it'll ever be caught. He is just unbelievable at what he does. Yet he has a shooting coach. Like, I would feel like an idiot if I was his coach. Like, come on, man, you should be teaching me. You're the greatest. But you're right. It is about constant review. And I think for anybody here who is struggling or is in that transition period, one thing that I would encourage you to think about is you always have to remain humble and never think that you're like, there's no way I would ever compare myself to Jerry and say I'm better or worse than Jerry. I am who I am. That's why I like golf. It's you against the world. And I will never make the claim that I'm better than anybody out there or worse. It's just I am fighting my own battle against this entire system that is trading and investing. And my job is to constantly be evaluating my performance. And that is generally done by how much money you make. And I think that there's a lot of different metrics that you should be looking at as opposed to here's X amount of dollars that I made or lost for the year. There are win percentages, what's your average win rate? If you look at like Brock Purdy of the 49ers, he has right now one of the historic numbers in the history of the NFL, and no one really talks about it, which is yards per pass. 9.7 was his last before the previous game. And you're talking greats like Kurt Warner, Brett Favre, Joe Montana didn't even come close to that number. It was way less than that, right? So it's always evaluating, okay, right now Brock Purdy doesn't need to worry about his yards per pass because it's already amazing. Where can he do better? Well, turnovers in that last game he played against Baltimore. But we always have to improve, and I think that's why many of you watch this show. That's why I know a lot of Jerry's students as well and then they're saying, look, I want to get better. I want to continue to improve, and that's why you do this. It's boring. It's cumbersome. It's a pain in the ass to go through your trades every year and do this, especially the level of detail that I go into, but it's that piece that takes you to that next level and at least keeps you where you're at, but hopefully improves it and takes you to the next level. So that's my long-winded answer on why I do it.
Yeah, no, likewise. I echo everything you're saying, Merlin. Like I said, you take any great at what they do, regardless of whether it be whatever it is, and they're all doing it. And I think it's a great example of Curry having a coach, having a shooting coach, because but that's what makes them great is the fact that they are great and they're seeking to get better.
Right. Yeah.
So yeah, no, it's amazing.
It's tough to look at somebody like Steph Curry and go, you can shoot better, right? But he knows he can't, and that's why I'm glad he's on my team.
Absolutely. Love him. Yeah. Hope the rest of the team gets started to go a little bit, but I do love him and I do like that team. Great team out there.
Yeah, fun to watch. As you go through your trading year, is there one trade that stands out as like that you just totally screwed up? There's one that you hold your head in your hands and go, I don't even really want to talk about this with Merlin right now because it kind of hurts. It's emotional baggage to you. Something that happened this year in the trade that you go, this was one that I just screwed up on. Anything and pop out to you? If you don't want to, it's okay. I don't want to put. It's emotional damage. I know.
Merlin, no. I mean, honestly, no. And the reason I say that, with confidence, is because, when we, at least for myself, when I started out, I took losses. We all took losses. And we took stupid losses. At least, again, speaking for myself, right? They were bigger than they should have been.
Right.
But I think over time you learn. You're going to learn, or you're not going to be doing this any longer. You learn that you have to be able to manage that risk and manage it. And I think, again, to bring up the combine one more time, one of the things it taught me was how important the risk management was. Because in this combine, if you exceeded your daily loss limit, you got thrown out of the combine and then you had to pay to come back in.
Yeah.
So, you learn really quickly, okay, wow, I'm going to do this and I'm going to do X number of contracts. Oh, wait a minute. How much risk is actually on there? And you look at it, it's like, oh, wow, it's outside of my daily risk. If this trade doesn't work, I'm done and I have to pay to get back in.
Mm-hmm.
So anyway, no, what bothered me more than my losses were disciplined. I'll say that because I learned that they had to be. I couldn't go outside of a daily loss limit or I got booted. So the losses weren't the problem. What I started to get a little bit challenged with, not so much this year, but in the near future or in the near past was not letting things go. I think that to me became more frustrating than even taking, a loss here or there that was managed, but all of a sudden seeing something go 2 or 3 times as far as you thought it might have gone. and not having been a part of it.
Mm-hmm.
That's what became more frustrating to me. So it's a great question you're asking. And I hope it's a good answer, because it's a different answer, I think, than what you were looking for, but it's the reality for my trading. Like I said, the losses were manageable. I didn't do anything crazy there.
Yeah.
It was more so, oh wow, here was another, X amount of money that I could have made had I done this.
Mm-hmm.
So that's what I started to look at.
Yeah, no, I like the answer. I mean, look, the answer is the answer. I like it from the perspective of, in your year, you didn't have anything that really got away from you. You didn't have any that you're like, oh God, what a horrible trade. Like I did, but let's be clear, I have multiple accounts, and in most of the accounts, like you just said, there's very specific things I can and cannot do. Like you mentioned, if you took X amount of losses, you're kicked out. Well, I kind of have that same mentality. So in each account, I have to follow specific rules, and I have two, I call them gamble accounts, and it's where I can take whatever high flyer chance I want. I don't have stop losses. Whatever goes. And both of those accounts this year, each one suffered I would say a catastrophic loss. One of them was the First Republic meltdown, which it went to pretty much zero. And the other one was on natural gas. I had a pretty big position in oil, and all of a sudden it was like down 10% one day, down 10% the next day, down 10% the next day. Like, oh God! But again, in those accounts, that is acceptable. I'm allowed to do whatever I want. And the thing is, with those types of accounts, I keep the balances very small on purpose, because I know from doing this for so long that those accounts generally don't become the big winners. Right? Those gamble accounts, I'll have a couple years where it's just phenomenal performance. Like, wow, I made 300, 400, 500% in that account. And then other years where you're down with 60, 70% in those accounts. That's ulceritis right there, if you have all your money in those types of accounts. So those are very small accounts, but my big accounts, extremely limited on the downside. I don't take chances there, and there shouldn't be any surprises if I'm doing what I'm supposed to do.
Yeah, and I think you said it perfectly. You have those accounts designated specifically for what they are, so you're staying within the parameters that you designate. And then also, you're also doing in those accounts, it sounds like you're doing, I think you're doing more longer term pieces, so it's not like you're letting a day trade get away from you. You're looking at something, and you're probably using options, but you're doing it in a larger or longer time frame, which also makes more sense as well for the way you're doing it.
Well, I do have a day trading account, but it's that day trading account. It's done by the end of the day, so I don't really give it enough time to get away from me. Right? There's no ambiguity in a day trading account. It's the end of day, you're out, if not before the end of day. So while I would say I'm more of a swing trader, I have a little bit of everything going on. And as long as the rules are defined, that's why I'm emphasizing this point for everybody who's watching today. If you don't have defined rules for your account, or worse, you're mixing rules and objectives in one account, I think that opens up to a lot of problems there. Like if you're a day trader, but it's also your swing trading account, you're going to have problems, because you're going to go on a bad losing day trade. Then you'll carry it and go, oh, I meant it to be a swing trade. And all of a sudden it's a long-term investment that's just railing against you, killing your account. So make sure each account has specific rules that are followed. Split it up. You can have many accounts, right? There's no limit on the number of accounts you can have at different brokerage firms. So make those rules for yourself.
Absolutely. Merlin, anything that caught your eye in your, and I don't want you to give away too much what you're going to talk about tomorrow, but anything in your review that is eye-catching and would be captivating to the audience?
I would say the only bad parts were those two trades on First Republic and Boyle. Other than that, it's similar to what you have, which are the shoulda, coulda, woulda. Right? I should have kept my Nasdaq. I should have kept the Russell Long. I should have kept my Anheuser Busch. I should have kept my. There's a lot of stuff I wish I would have held on to, but it hit my targets. I got out, had nice winning trades, and kind of rubbed my hands of it. So I don't think outside of those two, there's anything I'd look back at and just regret or have remorse for. Again, it's following the rules. So at the end of the year, every person should look at their trades, and if you go back and any one of those is emotionally disturbing, then you should go review that as deeply as possible and find out why. And most likely it's because you did something wrong. I tell all my viewers, I've got a list of 10 laws that I go by, and those are basically rules. I used to call them my 10 commandments, but somebody got offended because I made it religious. Like, he was given 10 commandments. Anyway, I look at them as my kind of 10 commandments for trading, which is this is the rules I have to live by. And the reason those exist for me is because every one of those rules, all 10 of them, have cost me significant amounts of money. So, I'm sure in your mind you have things that have happened to you in the past. You're like, man, I lose money when I do this and this and this. Well, write a rule so that you don't do that anymore. It's funny because one rule in there actually is kind of the same thing repeated 3 times. Yeah, when in doubt, get out. Don't go beyond your stop losses. I mean, that's something I used to break all the time, and now because I've made it my cornerstone of my rules, I don't worry about that anymore. So no, nothing really that dramatic other than those 2 bad trades in gambling accounts, which is fine.
Right. And like you said, it can be something that you learn from on the negative side, but it can also be something that you learn from on the positive side. That's something I actually want to share now. If you don't mind, I'm going to share my screen again with you real quick.
Sure. And everybody who's watching, if you have something that you want to ask Jerry about his trading or mine, just let us know. You can type it on in the chat here, and we'll answer them on air. Or if you want to share one of your stories, I mean, I'm going to do more on this tomorrow when I look at my accounts. But here you go. Here's Jerry's screen. Oh, that's your fans only page. What's that? Totally kidding. Totally
what's that?
No worries.
Like, wait a minute, what I put up there?
No, we're good. I got your screen here.
So I was mentioning earlier that one of my favorite strategies is the opening range, and just how I can get into the markets at an earlier point in the day. And first of all, in reviewing trades, that's what I found. That's how I found this, was that I could get into some of these trades midway, but if I'm able to get into them earlier in the day, I'm able to capture a larger part of the move. So that was a very positive thing. And then from there, I was able to identify that, hey, if I get into some of these opening range trades and I have the support of a daily time frame, I can either stay in the future or exit the future at the end of the day, re-enter at 5 in the evening Central or 3 in the afternoon Pacific for the overnight session, still participate in those long moves, or even so, use an option and just be a part of this. So this is an example. I just want to show you, this has been a fun one. This is the opening range. This is a 5-minute chart, NASDAQ. A few days ago, you can see we did our 1-to-1, 2-to-1, 3-to-1. It continued to go a little higher. This is this week, by the way. It continued to go higher, and it's turning into a really, really nice move. Now, what's helping that is if you go to the daily chart, and this was actually another motivation for me to do this, was the daily chart. Now, take a look at this. I'm going to move the fibs out so you guys can see exactly what I'm talking about. But again, I love this SAR indicator, and again, there's so many ways to use this thing. But so from where the SAR flipped right here, these are little blue dots. I hope your viewers can see them, but these little blue dots, it's a bullish indicator. Basically, it's a parabolic SAR. I talk a lot about it in my room, but it's something that in this example would be perceived as bullish. So from here, when this is a daily chart, when price started to move, all of a sudden now where are we at? We're from here up to current price, and you can see the SAR is still bullish. So what I'm getting at is basically I've been using the opening range to initiate these trades, and then depending on where they are, I can keep them. Like, for example, here was where the trade or the origin of the trade. Well, all of a sudden the next day we did another opening range to the upside. So now all of a sudden you can continue to ride it up. Here's another one, continuation to the upside. This one did an opening range to the downside. So I might have exited. So it's a way of, active. It's a kind of a blend of active trading and swing trading, which can be really, really useful, in the futures market. And then I like to combine that into the options and do something like maybe on the Qs, which correlates to the NASDAQ future. So I just wanted to mention that because this is something that I learned in doing those reviews like you were talking about. It's like, wow, if I do this, I can achieve these results as opposed to just, this portion of the market that I'm getting. So kind of cool stuff. And that review that you're talking about made this all possible.
As I look at that chart that you got there, you've got 2 different moving averages on there. So, how does this differentiate itself from the moving averages? Like I'm assuming that the yellow, whatever that orange or yellowish one is the 20 period, and it's probably the 50 down below it. You could use the same basic rule and say, until it closes below that 20 period moving average, I'm going to stay long. So what was it that drew you to the parabolic SAR?
The journey. Wow, let me think about that for a second, Merlin. That's
because I'm looking at the chart, and they're all 3 are telling you the same thing, right? One of them, every now and again, price with the parabolic SAR kind of goes below those dots, and okay, that's fine. But if I look at that moving average line, it would have told you that after November 5th or something, there was no point at which you should be getting out, and you should still be long the NASDAQ 100.
Exactly. That's very true. So I think it was education that I was seeking with regard to, and I'm honestly trying to remember what stemmed me into the parabolic SAR, because I think it was the moving average crossovers that I was looking for. And you're exactly right, by the way. It's a 20 and a 40 on the moving averages, and basically, yeah, when the 20 is above the 40, it's a bullish scenario. When it's below, it's a bearish scenario. And when you couple that with the parabolic SAR, that's when it got to be extremely positive. And you're right, because and I know this. Well, here I'll go back because it's not just that. It's not just this example. It's not just this example. This is how these markets trend more often than not. That's one of the reasons I'm actually working on, a new course for my students in my room that's going to be incorporating some of this stuff because it's so powerful. I mean, the market, like you said, we've been bullish here on the SAR. Crossovers went bullish here. You're still bullish, and you're talking, thousands of points. It's an amazing move, and I like that confluence, and that's exactly what you mentioned as far as the confluence of using different indicators and them all saying the same thing. Well, if they're all saying the same thing, odds are price is moving in the direction that you're expecting it to move, which in this case would be up.
Right. Yeah, without a doubt. No, it's one of those things where, certain people get a preference to one indicator or the other, and, some love the moving average crossovers, and some are using MACDs, and there's so many different tools out there that people are using. It was just, I was just curious as to, was there a specific reason that it was parabolic? Because you have all three on there, right? You got your 20 or 40 and the parabolic. You could throw other stuff on there as well, but we gravitate towards what we feel works for us, and I was just curious on that one.
And I think and you summed it right up. It's so important that, we customize what works for us, and what, with that specific trade plan. And so, yeah, that's exactly right. That's you summed it up perfectly.
Tell me what's going on with you. I know you have, let's see, I've got Pacific Shores Trading over here. There's look at that nice smile over there. How do you remain so tan when you live in Chicago? Like, come on, I'm out here. It's a cold day here. I think it's 66 degrees. That's freezing. Like, it's almost a state of emergency for us. You don't get sunshine like we do. I don't know how you do. You need to move. Come to the beach, dude. Because you're not really on the Pacific Shore. You're like the North Shore trading. So this is misleading, Larry.
If I'm going anywhere, I'm going exactly where you are. I'm going Southern California. So, but the way you stay tan all year is you travel. So, for example, like we were talking about before the show started, a little Hawaii, a little Southern Florida. You travel enough, and you keep yourself, you keep that vitamin E coming in. So that's the name of the game right there.
What do you got new going on over at Pacific Shores? Is there any fun, interesting, anything you want to share?
Lots of. As a matter of fact, I was talking about opening range. I just put an opening range course together, so that's available for my students and any students that would be interested in it online. It's an on-demand course that talks about basically, how you can be a participant in these opening range trades. That's one of the hottest subjects or trade styles in the world, and there's so many different approaches to it. So basically, I went into about a 2-month study of opening range and customized some things that work really high probability for me and for my students. And so I just put a course out on that, and I'm still doing my daily trading room from in the morning 10 to 11 Central Time every Monday through Friday, which again people can subscribe in and they can be a member of that live. And then I'm still offering the one-on-one coaching. So in effect, had a couple of sessions this week with people. Those are one-on-one Zoom sessions that people. They come in, they can share their computer. We can talk about whatever areas, they need to work on the most. And it's an hour of just them and I and their computer and my computer. And it's really cool. So anybody interested, in any one of those phases, the best thing to do would be to email me at the Jerry at Pacific Shores Trading website email that you have up there. Just email me, let me know you're interested in this or that. And I'm good about responding back to those people. And I love my room. I love the people that I have. And I want to say hi to them. I've had a really nice group of people following me now for the last almost year and a half, almost couple years online since I started doing it online. Everything else before that was live in person. And, they participate in the courses, they participate in the room, they do the coaching, and, that investment they're making into themselves. I've got some great stories. My testimonials are on the website. And, every day, people are sharing trades and, hey, I did this and this, it's really nice. And it's a big reason why you and I do what we do, Merlin, to help people kind of understand these markets, at a level where they can, start to make progress for themselves.
That's the hope. Question here from Margaret. She says, why don't you hold overnight versus selling at the close and buying at the open for the futures markets? Good question.
Great question. Yep. Great question. Ideally, Margaret, that would be the way to go. And with an option, you can do that. The rules I trade my funded account more now than I trade anything else. And the rules in the funded account state that I have to be, like Merlin was saying, I have to be out of day trades by 3:10 Central, and then I can get back in at 5. But I'm not allowed to hold anything from 3:10 to 5 Central. So that's why I have to exit there and then re-enter there if I choose. Otherwise, yeah, if it's your own account and you have the margin to, sustain the size, then you could just do that. You could just hold it constantly, or with an option, you can continue to hold it, which, in this example would have been, still a beautiful trade as well. But that's why, Margaret, that's a great question, but that's why I do that.
And that's the rule from the prop firm, right?
That's correct.
Yeah.
Yes, Merlin.
So Margaret, hopefully you understand why. Since it's a prop firm and you're typically trading a bigger pool of money, they're looking at it as, what is the riskiest thing that could hurt us? So let's say I'm the firm that you guys are trading my money, right? And Margaret, you're one of my traders. And I noticed a lot of people getting burned on an overnight gap. Bad news comes out, terrorist attack, Trump this, Trump that, Biden this, Biden, whatever it is, creates a 10, 15% move in the markets. All of a sudden, I could lose all my capital. And this is the horrible part about it. I hate this, sounds really bad on my part, but I apologize. It's just how I feel. I feel that most prop shops don't give a shit about you at all. I think that most of them are saying, we have to make money. So if you're making money, that's great for us. But if you start losing money, that's bad for me. So what they'll do is they're gonna create rules that protect themselves more than anything. Not you, but themselves. And if overnight positions are a piece that gets people burned a lot, then these prop firms are going to make that a rule. You can't take home positions overnight. I think it's a great rule until you get really comfortable and you know these markets inside and out. Because what will happen is you might be in a slight losing trade. You take something home overnight, and then all of a sudden you get a huge gap down, and your account is gone like that. It's over. It's a risk management tool that these prop firms do, and I can't fault them for it. I think it's a great decision to protect the customer.
Yeah, no, right on, Merlin. Yeah, no, those rules they're stated there, and like you said, they're very clear about what they are. So they're obviously, yeah, they have to protect themselves, and and if you follow them, you're ultimately, it's in your best interest as well. So no, you're right on with everything.
Yeah, I mean, these firms, they want you to be successful because, again, the more money you make, the more money they make. That's just simple business. So if they can put something in place that will protect you, which I think is a great idea, in the long haul, that should help you in your longevity. She asked, what futures broker do you use?
I've got a couple. There's Trade-O-Vate, which is one, and then there's also TradeStation, which is another one. Those are the two main ones that I use.
Okay, Trade-O-Vate.
Yeah, yeah. You know what? I'd never heard of it, Merlin, until I was awarded this funded account. But it's TradeOvate, Trade-O-Vate, and I will say they've been great. I use so for that account, I do my charting through TradingView, and then I use that account to execute trades. So right. I mean, that's all through the prop firm. So like I said, that wasn't something I went out and sought. But it's working out great. So yeah, Trade-O-Vate's a good one. I still have a TradeStation account, which I still think the charting on TradeStation is excellent. I know they're getting a little bit crazy with their fees, but I still like them as well. So, but those are the two that I'm most familiar with.
Excellent. All right. Well, I guess that'll wrap it up. What time we got? Yeah, I got to get to some other stuff here. So, Jerry, thank you for coming on. I know it's been a good year for you. I'm glad to have you back on the second to last show. I hope that you do something fun and exciting for New Year's, and I'll look forward to having you back on in the new year.
Merlin, thank you so much. Thank you to you and to all your people. And like I said, you're the best. I appreciate the heck out of you. We've known each other a long time, and I always enjoy getting a chance to spend time with you and talk high level trading. So thank you again, and Happy New Year to you.
My pleasure. Thanks to you, man. Take care.
All right.
Guys, that was Jerry Baldwin of Pacific Shores Trading. Got the website up there. I will bring it up here right now. You guys can check that one out. He's got a bunch of different education programs you can check out and hopefully improve your trading for the better. Jerry is so motivated, and it rubs off on us. Yeah, look, it's not just that he's motivated. I think all of us are motivated, right? There isn't one person that's watching this right now that goes, I don't want to do this. I'm not motivated. We're all motivated to some extent. One thing that I've noticed about Jerry, which I'll share with you as an observation of success, is positivity. If you're a negative Nancy, if you're somebody who's always like, oh, woe is me, and oh, it's this person, it's that person's the problem, most of the time you're the problem. Start manifesting positivity and being positive in not just your interactions with people, but the way you perceive things. If some piece of bad news comes your way, try to look at it from the positive side. It may dampen the blow of bad news by you being in a positive attitude. My friend Josh, who I've talked to you guys several times about, who is now living the life in Thailand, he is literally sitting in a 5-star villa, not paying anything, and overlooking the Indian or the I think it's a Gulf of Thailand, with an infinity pool, beautiful, picturesque everything, living like a king for just a couple dollars a day. And that's like this perfect dream that he's got. And how did he get that? He is one of the most positive people I have ever met in my life. It's unbelievable how positive this guy is. And it manifests itself. He brings about good people come near him, and all of a sudden he gets all of this stuff, and he's just such a good, kind person and always has a positive attitude. I've never heard him say anything negative. His life seems to be, receiving that positive energy. I think Jerry is very similar to that. He's very enthusiastic. He's very positive. He's always smiling and cheerful. And I think that it does rub off on you, and it should. I think we should all have that attitude and just look at everything instead of saying anything negative. Try to say something positive. Unless you're talking about a guy I hate from Chicago, then you can say all the negative stuff that you want. Anyway, hey, thank you, NJ. Happy New Year to you as well. Yeah, I don't know. I don't know how long this is going to last. The beard and mustache may have to get shaved here soon. Maybe it happened on New Year's. We'll see. When I'm having Brandon Wendell back on, not sure. I haven't talked to him. Haven't reached out. But maybe we'll have him on here soon. Probably not. Tomorrow there's going to be no guest. I need to spend a lot of time tonight going over my trades. I have not looked at all my accounts, so I may not have a complete rundown for you, but I know the good, I know the bad, and the general statistics. So I'm going to share some of that with you guys tomorrow. Talk about some of the changes that I'll be making in the new year. But yeah, I was hoping that maybe a little bit of Jerry Baldwin's perspective on how he analyzes his year would inspire you guys to do the same. So let's go look at our markets out there. I'm going to do this really quick here, and we'll wrap up for the day. Going from bottom to top, crude oil, I was kind of bummed. I thought we were going to see a bigger spike. There was my targeted line was $80.79 for crude oil. We had that nice spike on Tuesday, and then, Wednesday and Thursday, big drawdown. All right, fine. I was kind of hoping we'd rallied up more because I want to hear this inflation discussion start to pick back up, and then markets sell off a little bit. As far as markets go, crude oil down 3.16%. Not quite sure. It still feels like that downtrend is intact, although I felt it was a little bit too severe. As you guys look at that sell-off that started back in September 28th through December 13th, we fell 28.75% on crude oil. Obviously, huge beneficiary of this sell-off, the equity markets. We go up here to Bitcoin, down 1% on the day. This pattern right here that's forming right now is extremely bullish. This is an ascending triangle. This is a very, very bullish sign. Makes me feel like coming up here soon, which I've been saying for a while, we're going to get that spot Bitcoin ETF approved, and that'll just break out here like a typical ascending triangle does, and this will rip to the upside. So I mentioned I thought we'd hit 45,000 in August. I said that back in April that we'd hit it in August. Well, I was a month or two off. Russell 2000 down 0.47%. A little bit of hesitation on yesterday's session. Same thing here today. So you got two little kind of spinning top candles, hesitation, not a big move. Typically, that will lead to a little bit of a pullback here, which may, break the hearts of the bulls hoping to ride this rally out for the end of the year. But on the day, down 0.47%. Gold and silver both down today. I have not sold calls against my silver yet. You guys know I have a large position of silver, and I wanted to sell calls. I've just been waiting for it to tick up a little bit more. I think I'm going to get a nice rally up here in silver, so I'm holding. Now, what we have here today on gold futures is a bearish harami. This is a pattern that is very bearish and therefore may lead to a pullback here. I'm not sure why we have this old supply. There we go. Who is likely to be approved first, Margaret? I would say BlackRock. I'd say BlackRock and maybe the ARK fund, which is Cathie Wood's. But I think what you're going to get, I think you're going to get three at once. It would be too stupid for the SEC to approve just one. It would show preferential treatment. BlackRock is funded on, from high above, so they're going to get one, and then they'll probably do two others. And then what will probably happen is at a certain point they're going to say, okay, we'll approve all 5 or 6 of these. Well, there's 13 right now, but let's say they approve 6 of them. What will happen is the money is going to flow to BlackRock. It's the biggest. It's got the power. It will push things. And what you'll get is out of these 6, 2 or 3 are going to kind of disappear over the next few months as more of the money pours into the big, more stable ones, which will probably be BlackRock, Fidelity, and the ARK one. So that's my 2 cents on it. Who knows? It's all speculation at this point, but BlackRock, I think, will certainly be one of the first to get approved. All right, NASDAQ 100 down 0.13% today. We've been hitting all-time highs with the NASDAQ. Well, the last 2 days, very small hesitation days. Notice the volume on this as well. Volume gets really low right around the holiday time. This week is no exception. It will be a short week, and volume is much lower than it normally is. We'll see things start to pick up near the tail end of next week. Let me get that volume off that chart there. S&P 500. There you go. Wonder what the ticker will be. It's already out there. Margaret, it's already out there. They've already filed for it. I just can't remember what the name was going to be. It's not XLB. I can't remember off the top of my head. I'll get that and have it for you tomorrow. But the ticker symbol for BlackRock's is already in the system. They have a QSIP, which is the identification code. They already have the QSIP for it. They already have the ticker name for it. So it's just waiting for approval, which is why I keep saying it's a foregone conclusion that we're going to get one. BlackRock's all ready to go. They're already filing for other applications for like an Ethereum ETF as well, but that will probably not happen. That was our top three. So third place, or bronze medal, was the S&P. Right now, it's up 0.03%, so we'll call it pretty much unchanged on the day. Notice this nice little spinning top both of these last 2 days. We are right now at 48.38, but here's where I want to focus my attention on is this SPX. This is the actual index, right, which is what we're going to use for our end-of-year forecast, which we'll talk about on tomorrow's show. We are right now at 4,783, the all-time high. As you can see here, 4,818 on the SPX, which goes all the way back to January 4th of this year. For us to get there, you're looking at 17 plus 18 is a 35-point move tomorrow for the S&P, which would be, if we get a 1% update tomorrow, we will hit all-time highs. We'll see if that happens. I'm not feeling that confident in it. You look at the way the 2 days have happened. Yes, they're going up, but very, very slightly. Look at the volume here. You got relatively low volume. So I just don't think it's going to break these highs by tomorrow. So we won't end the year on an all-time high. Let me keep going up here. That was S&P. Here's your 10-year, which has drifted lower. It actually hit that 3.85% mark and has broken that and continuing the trend, right? So we talked about the trend is your friend or the bend at the end. Well, this one hasn't bent yet. I expect this to keep on drifting lower and lower and lower. Now, the only thing that's going to change my perspective of this right now, this 10-year yield, is if we see inflation tick up in the next reading. If inflation ticks up, that means that the Fed is going to maybe not pause, maybe not cut. They may actually hold longer or raise their rates if inflation gets out of hand, and then all of a sudden this is going to tick back up and surge. So we'll see. Right now, people are buying at 3.84% for that 10-year, locking that in. Just because I think the Fed's going to be cutting. And lastly, your dollar index. While it was up 0.28% today, it still keeps drifting lower. I've got this target down here on the dollar index between 99 and 95. Let's call it the 100 mark is the target. We are currently at 101.23, so we have definitely some space to move to the downside before we hit that demand zone on the dollar. That, of course, is going to help out commodities. It's going to help out the market as well. So right now, trend is your friend to the bend at the end. Let's keep it going. All right, before you guys hit one more ad, I've got 18 seconds left. I'm going to wrap this one up. So thank you guys so much. Thank you, Jerry Baldwin, for coming on the program today and giving us some insights into how to review your trading year. I hope that you all heed that advice and go review your plans. If you have any comments, questions, feedback, send them in at TraderMerlin@gmail.com. I will see you guys on tomorrow's show for the last one of the year. Take care.